So, will there be any impact on the markets or stocks from this budget tonight? Evan Lucas from IG joins us live from Melbourne. Good to see you there, Evan. What do you think? Are we watching specific stocks in the lead up to the budget today? Could it actually move some of these stocks?
We probably won't find out that until tomorrow with regards to any sort of movement in stocks, Brooke. Obviously, most of what's coming in the budget tonight has probably already been leaked out and been factored into what the market suggests. We know about the MRRT, that's basically going to affect the materials space. I don't see them actually sort of touching that any further. The political heartache that would come with sort of changing the MRRT further would probably be quite detrimental to their current situation, and they are obviously on the back foot. I think the interesting place to probably listen to tonight is there is that possibility, we did hear it a couple of months back, about possible changes to super. Obviously, from a stock perspective, that's where we could see some changes. AMP is obviously one of the largest provider, if not the largest provider of self-managed super fund in this country. You've got also the likes of IOOF, and then the smaller providers themselves. If there's a change to super, there could be a bit of rumblings with regards to people maybe pulling their super out a little bit, bringing it down below that $100,000 cutoff that they were talking about as well. So we need a little bit more clarity, but I think if there is going to be a sort of a jittering sort of move in the market, it'll probably come from that financial services space if they do something to super to try and find ways to create additional tax uptakes for those major schemes we talked about. The National Disability Scheme is going to be an absolute legacy scheme of this Labor government. They really want it to go through, along with the Gonski reforms. They want it to be there. They want it to be there for September 14, and they're going to have to find ways of funding it a little bit further than they have. They've got the levy for the NDIS, but there's other areas we need to hear about, and that's probably what the budget will do tonight. The other one is the dollar, and see how much spending comes from this budget. The dollar will move around depending on that. The less money we have to spend, the higher the dollar is going to go because the money's not going to be flowing into the economy.
And just on those financial services stocks that then could feel the jitters, or we could see it play out for them, what are a couple of names that you're watching then?
As I said, watching very much AMP, the self-managed super fund is the one that we really watch very closely. It's their big core change that they've had over the last couple of years, really into that space. They're the major player in that self-managed super fund. The big four banks also have fairly high investment in this. Wealth management is one area that they've tried to pick up very heavily over the last 5 years. We've seen CBA pick up the likes of Count Financial. We've also seen NAB pick up things like JB Weir, and they're the kind of areas that will also be affected. They're small subsidiaries of these banks, but again, considering that they are quite highly valued, any form of possible revenue hits with changes to taxation to super is going to cause some slight instability in the market as a whole.
Okay, perfect. So, as you said, probably won't get all of that play out really realistically until tomorrow. Let's go to maybe some of the commodity prices. You've been watching gold, and there's been a couple of big calls on the gold price.
Yeah, gold's the one that obviously we've been talking about for the last couple of months. It's been a little bit of an interesting story, particularly with the big brokers. And today we saw DB, Deutsche Bank, come out and really change their medium, short, and even their major longer-term view on the gold price. And that's going to really impact their outlook on the gold stock. So we've seen them downgrading this year's average price to about $1,550, next year to $1,450, and the year after even lower again to as low as $1,400. And their long-term outlook on gold is as low as $1,300 US an ounce. That means that therefore people that are either fully valued in their eyes or with production costs are going to get downgraded as well. So one company that you never ever talked about of downgrading was Newcrest Mining. They have been hit between the eyes over the last couple of months, and Deutsche Bank has finally moved their buy call to a hold with a $19 price target and even lower. That's one of the lowest price targets I've seen on Newcrest probably in about 6 or 7 years. It has been a very, very good performer, and those days of it being up at $42 and higher look a long way away with those production costs we're seeing out of Woolly Galoof, and also what's going over there in Papua New Guinea. The Lahire Gold is their biggest issue. Something like Regis Resources, which has been a really good play for gold areas, quite good production numbers. We're seeing cost to earnings ratios really quite nice, but it is fully valued, and Deutsche Bank's put them on a hold as well. And $4.10 looks to be about where they're going to be fully valued. And it's the same with Silver Lake. They've also got the same situation. So watch the gold miners over the next couple of days. Gold continues to slide. It's down to $14.30. It may even go a bit further. But those mining companies that have real issues with production costs, like in Newcrest Mining, will probably find themselves lower and further again, making them even harder to reach those kind of earning potentials they are expecting in guidance.
Evan, also on the Australian dollar, which you mentioned briefly earlier, do you think that remains a key supporting factor for this market, or how are you actually weighing up overall the implications of the Aussie back below parity?
It's certainly a support. If you want to have a look at how support's gone for any form of currency dropping below, have a look at the yen and the inverse correlation with the Nikkei. The Nikkei is outstripping most markets by almost 10%. It's up about 23% this year, and the Nikkei continues to depreciate against its majors. With the Aussie dollar below parity, the repercussions are massive. Bottom line's obviously improved. They're going to get more Aussie dollars for whatever they're derivative. Most of it's in the US dollar. And those US exposed stocks, for instance, CSL, ResMed, you're also looking at Boral, James Hardie and the like, they're going to get additional revenue coming there. If you have a look at CSL, it's come down a little bit. It's been put on a hold, but this morning it's jumping up. And the more and more we see the Aussie dollar below parity, the more and more bottom lines will continue to be affected. Your BHPs and your Rio that have been pushed down quite hard will also find themselves back on the way up as they continue to put their earnings in Aussie dollars rather than US dollars.
Okay, perfect. Anything else you're watching just in terms of key drivers or factors that we're watching out for for our market today, Evan?
Yeah, unfortunately, it's a pretty slow day. All eyes are going to be, and all ears are going to be on the budget tonight. There's going to be a lot of more and more news coming out of it. So from our region, it's fairly low key. There's not any major news coming out of Asia either to this afternoon. So unfortunately, it's going to be a bit of a drifting day. We're not going to see much. Watch the currencies, particularly the Aussie dollar, with more and more news coming out with the budget. And then tomorrow morning, we can go further and discuss how this is going to affect us coming up into September 14th and then in the longer term.
Wait and watch today. Thank you so much, Evan Lucas from IG. Appreciate it.